What's going on, traders? Welcome to the SPACs attack, baby. Let's get it started. What's going on, traders out there? I hope you guys are enjoying the day as I am, like always. If you guys like the SPACs, definitely give me a thumbs up. Let's go ahead and bring the brains to this show. You guys know him as Chris Katje, but if you don't know him as Chrisopedia, you need to take lessons and take some learning because my man, Chris Katje in the house. What's up, dude?
Hey, what's going on, Mitch? How are we doing today?
It's going good. Ready for another interview today. Looks like I didn't get my right coloring in the back. I got to fix that up. Let's be more like, we got to look like Chris, man. Come on.
Got to match the dynamic duo here.
Right? I think I forgot a lie. That's what happened there. But let's keep it going. Don't worry about it. We don't got to stop. We're going to keep going. If you guys like the SPACs, what's going on out there? Hey, hit me up in the chat. I love to see everybody in the chat talking amongst yourselves. Talk about the SPACs that you guys are looking at. Let me know what you guys are checking out. We're going to go ahead and get into our headlines of the day. Then we'll be getting into our interview. You guys already see it over my corner. The SPACs attack. Wrong corner. All right, let's go ahead. Let's get into the headlines and let's go ahead. Chris, what's going on out there? Let me know. Take us back.
All right. Yeah. Before we dive into that interview today, we do have some headlines. We do have a rumor and a deal to get into. And then, of course, we also have a short report to discuss, once again, targeting a former SPAC out there. So up first, we have VACQ. Company is merging with Rocket Lab. So Rocket Lab winning a NASA award contract for a mission to Mars in 2024. This is the Escapade mission with a goal to send a spacecraft into orbit to study the makeup of the planet's magnetosphere to better understand how solar wind removes atmosphere over time. No dollar amounts on this, no cost revealed. But this is an interesting one. And, you know, as I've said before, Rocket Lab has already won awards to go to the moon and to go to Venus. So now adding Mars, and then the company also noting that NASA will later pick a rocket to launch Escapade, and that the company is hoping to have its Neutron rocket ready in time to compete for that additional contract as well. So Rocket Lab winning one award here, but also could end up winning more for this mission to Mars. So again, Rocket Lab missions to the moon, missions to Venus, and now missions to Mars. If you're looking at space stocks, this is definitely one that should be on your radar, VACQ. Then we have FOA, Finance of America moving today. Raymond James upgrading shares to a strong buy and announcing a price target of $13.50. Looks like shares at about $8.45 right now, up 16%. This is one we've talked about a lot. We, of course, had Patty Cook on the show a couple times. Finance of America competing in the mortgage market and also several other areas. Getting a strong buy here. We haven't seen a ton of, strong buys from these former SPACs. It's mostly, outperform buys or the negative reports, but a strong buy indicated here. Looking like there could be room for upside, and it looks like investors reacting to that target from Raymond James. And one of our favorite SPACs to talk about, of course, we have PSTH, Pershing Square. So recently it was announced, Bill Ackman's SPAC looking to acquire 10% of Universal Music Group from Vivendi. A couple interesting things I called out on the show not too long ago. that Artisan opposed the plan to sell the stake to the Ackman SPAC, and also saying a full spinoff of UMG would be more tax efficient. There is a vote coming up 1 week from today, June 22nd, to determine if Pershing Square will get that 10%. And now Bloomberg noting yesterday that hedge fund activist Dan Loeb has built a stake in Vivendi. It is not clear how much he owns, but the stake was called substantial. And also Dan Loeb has yet to voice an opinion on whether he supports the UMG transaction. So we could see a activist battle going on here, and this could actually be a roadblock to Ackman getting that 10% stake. So keep an eye out on this one. We're a week away, and I think we start to hear more news coming out soon on Dan Loeb's plans for Vivendi ahead of that shareholder vote. But, Ackman is not out of the woods yet to land this deal. Then we have ALUS setting a vote date of June 30th on Fryer. That's a battery play. And then some movers yesterday, SVOK up 1% on that deal was boxed. GSAH down 2% on a rumor, which I'll get to in a minute. And NGCA shares up 6% on that rumor with Virgin Orbit. AACQ, which is merging with Origin Materials, also signing a deal with Palantir Technologies today to form an alliance to accelerate the world's transition to net zero carbon. AACQ within the last week then landing deals with both Ford and Palantir. So if this one was not on your radar before, I think it should be, as they are partnering with some of the large companies out there. Their plans for, that net zero carbon initiatives going forward. And our big rumor last night, we had just GSAH, that's Goldman Sachs Acquisition Holdings Corp. 2, announcing, or Bloomberg reporting that they could reach an agreement to acquire Mirion Technologies. Deal could value the company at $2.5 billion. If you're not familiar with Mirion Technologies, which I was not until yesterday, the company provides devices and services for customers who work with nuclear energy, monitoring and measuring radiation and contamination, providing alarms and managing waste, according to the company's website. Sectors include nuclear power, healthcare, homeland security, and the military. The company that owns Mirion tried to sell the company earlier this year, attracted interest from several SPACs and buyout funds. It looks like Goldman Sachs, though, is in the lead here to possibly acquire Mirion. As I said, shares sold off quite a bit yesterday. This one was not well received. We're down 1% today to $9.99. Keep an eye out on this one. And then our deal announced today, this one was rumored just a couple days ago. We have DCRC. This is a solid-state battery company with the backing of Ford and BMW, announcing a SPAC merger. This is a company working on solid-state batteries. Deal values the company at $1.2 billion. So they have been working on battery development for over 8 years and manufacturing capabilities for 3 years. Current DCRC shareholders will own 19% of the company after the merger. Those solid-state batteries are said to have a range of up to 500 miles and provide cheaper costs to automotive companies, and also last more than double the current 8-year life for batteries, according to their presentation. And looking to hit that addressable market size of $220 billion by 2035 for electric vehicles. Ford and BMW already have an existing joint development agreement to use solid power batteries in future electric vehicles. They're going to sell 2 products, one product that will be sold to companies pursuing solid-state batteries, and another product, the energy-dense pouch cells that will be sold directly to Ford, BMW, and other OEMs. Notable that Samsung and Hyundai are also investors in solid power. The revenue projections under $100 million annually until fiscal 2026, where they see revenue of 132 million and then really beefing up in 2027 with $1.0 billion projected. Despite the lower revenue amounts, they actually list hitting a gross profit of $7 million on $10 million in revenue in fiscal 2024. And this is being done at a cheaper valuation than QuantumScape Corp, based on 2027 revenue projections. Shares of DCRC down 8% today. Remember, this one has been running the past couple days. So now getting that deal announcement and the sell-off. And then the last thing to cover in headlines, if you were not aware, we have a short report out from Hindenburg Research on DraftKings. The report calls DraftKings a $21 billion SPAC, betting it can hide its black market operations. The research report specifically targets SB Tech, which is the company that went public with DraftKings as part of that three-way merger. Saying there's lots of red flags. SB Tech is involved in all kinds of illegal operations, including being tied to the black market, money laundering, and organized crime. At the time of the SPAC merger, SB Tech represented 25% of the company's revenue. So also not lost in the report, Hindenburg does state that DraftKings has major partnerships with the NFL, NBA, NASCAR, PGA, and UFC. It does question valuation a little bit on DraftKings, but again, most of this report just centers around that SB Tech unit. And Hindenburg is short shares of DraftKings, so definitely keep an eye on that. And should note that Hindenburg has targeted several SPAC mergers recently: Lordstown Motors, Clover Health, Nikola, and Pure Cycle Technologies. Of course, several of those reports have turned out to be ahead of the game before these shares fell. Benzinga reached out to DraftKings today, did not receive comment back. Shares were down to $45 earlier. They are rebounding today. I will note that I've talked about DraftKings before. They are switching to SB Tech to power their back end later this fall. But currently, they don't use SB Tech. They use rival Camby. So DraftKings actually has an opportunity here. Maybe they want to, cut ties with SB Tech, spin this business off, or they feel comfortable, keeping the business and switching. So what do you think, Mitch? Sports betting, we talk so much here. DraftKings, one of the best performing de-SPACs, getting hit on this short report, but I don't think it should come as a huge surprise here that maybe there is some sports betting ties to organized crime. I think we've seen Las Vegas and organized crime over the decades be pretty closely related here.
Hold on. I'm on the phone with my bookie. Give me a second, Chris.
Are you calling your bookie on is he on like the Cayman Islands or one of those international territories, or?
You just might find him in the Cayman Islands, but hey, what can I say, man? I mean, sports betting has been around for, let's just say, not only in legal terms. It's been around for a long time. You have seen it. If you haven't heard of kind of mob ties with gambling and sports gambling, I mean, you probably never really looked into some conspiracies. I mean, this has been around for the ages. People have been betting on sports, let's say, before they were legal. So I definitely don't think they put light on anything that wasn't already, if you're into the industry, about it. So I think this is obvious. One of the things that you mentioned that I definitely think is going to happen, and I talked with you a little bit before when we started SPACs, is that I really do think at the end of the day, all you got to do as a board here is just cut the risk, because essentially if you look at the report, you're not going to see too much on exactly DKNG. You're not seeing it on DraftKings. You're seeing it focused on another company, right? And so if this company has some ties that, hey, they can look into and see, hey, maybe we might just want to cut this, look for another provider or something like that, and we can just go ahead and move forward. I think that's what you probably see come out of this.
Yeah, definitely. And are you surprised, Mitch, to see shares rebound that quickly? We were down double digits, and it looks like we're only down a couple percent now. I have heard that several analysts who cover DraftKings are already out defending the name. I haven't seen any of those actual reports, but that's the rumors out. But do you think we get some analyst comments, tomorrow with some reports or some, color on what they think of DraftKings and SB Tech here?
Yeah, well, you can tell here how DraftKings kind of reacted. You can tell definitely a big gap down. A lot of people were talking about if it gets down to 40, I wanted it, but looks like 45 was that number right out the gates. It popped up through that number, really pushed on to up, now getting up there towards 49 multiple times and finding some resistance. So definitely look at that towards the day. Let's see if we get through that 49 resistance. If not, just pull back down closer towards 47. We can test back. Now, one that I wanted to pay attention to is not necessarily just look at that. See how it affected the whole industry. Did it really destroy kind of the moves that we're getting already kind of looked at? Penn was one that was being looked at. As you saw, it was coming down in pre-market, popped up right at the gates, now pulled back. Let's see if this can continue its way up. I would love to see if Penn or RSI or one of these can actually end the day green. That would be interesting because that would show that maybe there's some more positive sentiment in the overall industry. Even though the negative report came out on DraftKings, you could see the overall sentiment really get positive. I was looking already for these gambling stocks to make moves. As you've seen today, RSI has pulled back down closer towards that $13. We'll see if it can get back above 14. I think that's a very important price point. And for that being said, let's go into a couple more here. GNOG, I wanted to take a look at to see how that was reacting today. As you can see, it's on the pullback, coming back down towards that 13. We're going to look to see if these kind of react back up. But definitely, I mean, at the end of the day, I think the DraftKings report didn't really necessarily say anything that if you didn't look into the industry before, you probably had doubts on.
Yeah, and bets down 2% today, too. It looks like, DraftKings, obviously a large holding in the Roundhill sports betting ETF. But yeah, I mean, I don't think there was anything huge in this report. And it looks like DraftKings has already issued a statement that they were comfortable with their findings in SB Tech. We've seen this with other former SPACs, right? They get hit by these short reports, with questions on valuation, questions on how they handle orders. And let's face it, some of them may end up being right. I mean, we're seeing Lordstown Motors, that was attacked by short reports where maybe there was, something there that these short reports were seeing. But with DraftKings, I mean, I think it would take a lot to bring this company down. I mean, it is one of the most well-known names in sports betting. And again, this whole short report, it's not questioning the sports betting side or how they acquire customers or their relationships with the NFL or any of those partners. It's just strictly the SB Tech, which is their tech stack powering things behind the scene, maybe also powering payments in some other areas. So, I remain bullish on DraftKings. And like I said, I was watching that $45 mark, but I don't know if we're going to see that again today. Shares down 4%. We've got some hours before market close. I don't know if DraftKings ends the day green, but I think you're right, Mitch, that some of those other, sports betting names get back into the green after falling in sympathy here.
Giving you some news here, my friend. Giving you some news here. So definitely Credit Suisse is also calling this overdone. You said it, you started mentioning it. One of the things that the firm says is that it says minimal value in DKNG stock is being applied to SB Tech, which is mainly purchased for its tech platform and non-existing revenue stream, guys. That's right there where you kind of pointed out. Yes, it could be in question, but at the end of the day, that's not where they're drawing their revenue. That's not where they're drawing their value right now. It also states here that if you look, SB Tech generated about 105 million in 2020, which is only, even if you 5 times that revenue, would be equal to a $1 per share in DKNG. So definitely some defense coming out there. So we'll keep an eye on it. Let's go ahead and let's get into our interview, guys. This is where we go ahead and unlock some SPACs. I know that you guys out there are probably wondering, how do I look at SPACs and maybe get into a more diversified account? Maybe I don't want to be that type of person that wants to pick winners and losers. I think we got the perfect interview for you guys coming up. Definitely stick around, guys. Hit the thumbs up and let's go ahead and unlock some SPACs.
Yeah, everyone, super excited. We welcome back to the show Matthew Tuttle. He's the CEO and Chief Investment Officer of Tuttle Tactical Management. Company has launched 3 SPAC ETFs. We have SPCX and 2 new De-SPAC ETFs, DSPC and SOGU, which we're going to dive into today. Welcome back to the show, Matt Tuttle.
Thank you for having me.
Welcome to the show. Let's go ahead and let's drop right into the questions. As you guys see, I got the tickers above me. I'm going to also drop the tickers in the below if you guys want to check it out. Also, I'm going to be putting in the chat, I'll be putting up links. So if you guys want to check out maybe holdings while we're talking about it, check out the website while we're getting through it. Definitely, I'll go ahead and put that in the chat.
All right, perfect. So Matt, let's dive in here. Before we get into those 2 new De-SPAC ETFs, for anyone who maybe new to your work or didn't catch the last interview you did, give our viewers a little background on yourself in the industry.
Sure. So, we run Tuttle Capital Management. We've got 10 ETFs and manage close to $300 million. We just launched 4 ETFs the past couple of weeks, the 2 you mentioned, plus FOMO, which is somewhat self-explanatory, and FAT-T, which is our tail risk ETF. So that's kind of it in a nutshell.
Perfect. So we launched, these 2 new De-SPAC ETFs, one covering, the buy side, one covering the short side here. Why launch De-SPAC ETFs, and were you surprised that there was not pure play De-SPAC ETFs prior to the launch from yourself?
Yeah, we were really surprised. There's no shortage of ETFs in the world. So, the fact that SPACs have been so popular, so much in the news for the past year and a half, it seemed like, the market should have a De-SPAC ETF. So there wasn't one, so we launched it.
Awesome. Well, so the one ETF here, so SOGU, allows investors to play the short side of these former SPACs, the companies that have de-SPACed. What does the demand look like for shorting former SPACs? We've heard a lot about short reports, short squeezes, shorting stocks over the last couple months. What's the thesis behind that ETF, and what has the demand for SOGU looked like?
So one of the main reasons that we did this and we launched the De-SPAC index is because of the demand for the short side. I took a quick look in Bloomberg this morning. The index is 25 names, and they're 25 of the largest De-SPAC companies with a year look back. And 19 of the 25 have short interest above 10%. But this stuff is really, really hard to short. They're hard to borrow names. They're names that get squeezed. Imagine being short Clover, the other day when was up like 92% or something like that. So, we had a lot of institutional investors we were talking to about SPCX, who basically said, look, if you guys can come out with a way that we can short these De-SPACs in a nice package, that would be a home run. So that's the idea behind SOGU, is there's just no real good way for the individual investor, the institutional investor to short these names. So we put it together in one package.
Perfect. So you mentioned, that each of these ETFs, the index, is made up of 25 of the largest former SPACs. And then the index is rebalanced monthly and includes companies up to 12 months after the merger completion. Walk us through the decisions, to do monthly rebalancing and that 12-month look at these companies.
So really, most index funds out there get stale pretty quickly. So the monthly rebalancing was to keep the index fresh. And the year is basically the same deal. Like DraftKings, I don't know whether Hindenburg's right or wrong. What I do know is DraftKings is not a SPAC. And DraftKings dropped out of the De-SPAC index a couple of months ago because I would argue also, I mean, it's been so long since DraftKings came public, it's not even a De-SPAC. And so that was the idea with the 1 year look back, is keeping the, fresh De-SPACs. What we also wanted to do, on the long side, part of the investment thesis here is to give people access to companies that they're not getting access to in other actively managed or index funds. So we wanted companies that were pretty new. I got to figure, and I haven't looked at it, but I got to figure DraftKings is all over the place at this point, in all sorts of different ETFs and mutual funds. But if you look at the 25 holdings in the De-SPAC index, you're not getting exposure to them anywhere. When Clover had that massive upturn last week, I took a look and, there were like 4 funds that own Clover and we were, obviously the largest holder by far. I think 2 of them had minimal holdings and, one was 0.5%. And we were like 6 or 7% at that point.
So this index selects, the 25 companies, and it's not necessarily the largest 25. Right. You had told me before, it's based on the availability to short and some other factors. So what are the biggest decisions to pick these 25? Does any fundamental thinking, or the long-term growth prospects go into it? Or is it, really based on size and availability of shares?
So, size, availability of shares is big because, one of the things with SOGU is, if there are 3 names in there that we just can't borrow at all, then we can't get swap exposure and, we're not going to be able to, provide what we want. We want a fairly diversified set of holdings. We want holdings that aren't typically represented other places. So those are the things that we look at there. We're not, pouring through balance sheets or anything like that fundamentally.
So one of the holdings in the De-SPAC ETF is RIDE, Lordstown Motors, which, has been in the news a lot.
Nice ride.
Yeah. So, we see the short reports. We hear, the CEO, the CFO resigning, because of the ETF having the long and the short side of things. Is there a decision then to keep a company in there rather than, an ETF that may, decide to cut ties with the company due to all the negativity? Is there any decision making with RIDE going forward, or will it strictly be based on that 1 year timeline?
So, a couple of things. We just on Friday completed our rebalance for the month, and RIDE stayed in there. So really everything stayed in there. The only thing we did was we went back to equal weight. The only things that would kick it out next month would be market cap. Obviously, if RIDE goes from where it is now to, $1 a share, it won't be anywhere near one of the largest, De-SPAC companies out there. Also, if it becomes impossible to borrow, that may kick it out. But, certainly, barring those 2 things, that's the type of name we really like in this index because it's a name that's going to move. And, it doesn't really matter to us which way it moves, one way or the other. We've got an ETF that's going to take advantage of it, but we certainly like names in this index that are going to move. In this index, it definitely moves.
We talked DraftKings, the Hindenburg. I mentioned RIDE, with the short reports. As someone who's involved in the ETF space, always watching the market, do you pay any attention to these short reports, read through them, or is this just, a normal market activity that, is just ongoing?
So I don't pay attention to them. I don't read through them except to the point where one of the other ETFs we launched, for example, FOMO, we do have a short squeeze basket in there. So what we are looking for is we're looking for stocks with high short interest, but, and this is an important but, we're looking for some sort of fan base. Just the fact that, DraftKings might have a high short interest, that's not going to do it. what we also need is there's got to be some sort of fan base, whether that's love from the retail investor, love from hedge funds, love from insiders. There's got to be something there. So from that standpoint, yeah, that's something we look at because, short interest is rocket fuel. If I can find a match, then you've got, an AMC, a GameStop, all those fun names.
You mentioned a rebalancing recently being completed for these 2 new ETFs. Is that a set date each month? Is it based on a calendar date or a certain day of the month for the rebalancing?
Yeah, it's second Friday, market on close.
Okay, perfect. And then will those updates and the new holdings, will that be issued in press releases then, or can investors, just look at the holdings on the site?
Yeah, no, the holdings on the site are updated on a daily basis. Typically that's 9 a.m., give or take, a few minutes either way. And I mean, it's an ETF, it's totally transparent. And, so they should be updated daily everywhere you look. So, no need for a press release. You can see it. And, for people who have Bloomberg, the index is up there. And unlike a lot of indexes, we make the holdings public there as well. So a lot of transparency here.
And then one more question from me on the 2 new ETFs, and then I'm going to turn it over to Mitch on some of these holdings. When we spoke on the phone, Matt, you had mentioned a catalyst for some of these de-SPAC companies being inclusion in future Russell indexes. We did get, the early report on what companies will be added to the Russell indexes. Any surprises out there? Anything jump out in the names in the 25 holdings as far as the Russell indexes go?
No. So one of the big kind of investment theses we had on the long side was we wanted to choose names that weren't in any Russell index. And, and we knew, or we hoped, that 60+% of our names would get added, and it turned out to be a lot more than that. So yeah, we were pleasantly surprised. I think it was 23 out of 25 of our names are going in. And, that's one of the big reasons why you've seen DSPC. I mean, it's been out for less than a month at this point, and it's already up close to 20%. And I got to figure a good chunk of that is the Russell rebound.
All right, I'm going to go ahead and jump in here. Let's go ahead and let's talk a little bit about some of my favorite holdings that you got in the DSPC. So one of the first ones I'd like to talk about is DM. And really what I want to talk about is kind of more 3D in general. How's your feelings on 3D? Do you think this is kind of more of something that we're going to see kind of adopted in the next couple of years? Or do you think it kind of being adopted even as close as this year?
And it's really both. I mean, if you look at 3D, there's a whole bunch of things that if you look at them, you're like, hey, that's the future. 3D printing is one. Electronic vehicles is another. And so that's stuff that we want to have access to, in this fund. We want to, there's a lot of different things here on the long side. One is the fact that, again, it's names that you don't own. And 2 is it's a bunch of really innovative industries. So yeah, I mean, we see 3D printing is that's the future. And so that's why we like to have a name like that in the portfolio.
Excellent, excellent. One of the things I did see was them moving even into dental and all over the place. So this is going to be interesting. Next one I want to get into is more on kind of like data. We had that DKNG, we could talk sports gambling, but I wanted to focus on one that's down here about just under 4%. Genie Sports recently has had some offerings. I think this is a good thing for the business as they look to use some of that money. We've been seeing them get partnerships. How are you thinking in the sports data kind of business? How do you think Genius is holding up here?
No, I mean, we think it's been holding up great. And again, it just goes to provide a lot of diversification to the portfolio. We don't want something that's, all in electronic vehicles. We want a lot of different industries. So, again, another name that fits in perfectly. And, something that you're not going to have in your traditional portfolio.
Excellent. And while we're on trends, the last one I want to bring up is open. And really, this is a question, and I'd have to ask you, Matthew, on what your opinion is. What are you thinking about kind of realtors? Do you feel like the transition to kind of digital is really going to slowly kind of take their job away? And this is one of the biggest reasons why we're also seeing open kind of taking advantage here. What are you thinking about the business here of open technologies?
I mean, I think they're perfectly positioned. I think realtors are the way that business is run, it's a dinosaur, and technology is going to completely and totally change it. So, again, another diversified name that we really like in the portfolio.
Awesome. I'm going to jump back in here, Matt. Let's turn it over a little bit to SPCX. So the first SPAC ETF that Tuttle Capital launched, over 100 holdings in this ETF. You had said before, looking to buy strong quality management teams along with buying under that $10 level. What are the important things, probably those two I just said, going into making the selections for the holdings in this ETF?
So we've changed, how we do things quite a bit since the heights of the market. If we were talking back in February, it would all be about getting into IPOs, get as many IPOs. Again, strong management teams, solid track records, getting in on IPOs. Now, obviously, the SPAC market has changed. So what we're looking at is a couple of things. I mean, obvious, strong management teams, strong track record. And the beauty now of this generation of the SPAC market being out now for more than a year is you've got a lot of serial issuers. So, you can really get a sense of track record because, there are too many SPACs chasing too few deals. And I think it's going to end up like, private equity venture capital. The best deals go to the best management teams and the weaker teams are left with scraps. So, that's number one. And then number two is getting this stuff under 10. And, I saw a statistic today from one of our brokers. I don't know if it's true, but it makes sense that of all the SPACs that are out, pre-merger SPACs that are out there right now, only 10% are trading above cash and trust. So we're seeing a lot of great opportunities to get these good SPACs under 10. The other stuff we're doing, we're participating in founder shares deals because the risk reward and the economics of that makes a ton of sense. And something new, because now the pipes have had so much trouble and, the traditional pipe buyers are kind of locked up in a lot of deals, is we're participating in pipe transactions, which gives us really access to the three layers of making money in SPACs, which all have kind of different risk rewards to them. So, that's what we've been doing. I think that, the SPAC market looks like it hit a bottom a little while ago and things are going, so far so good in a nice direction.
Awesome. So I look through the holdings of SPCX, and of course, a couple notable names that are not in there. We have PSTH from Bill Ackman, and then Chamath. I do not see IPOD, only IPOF. Is this a decision just strictly based on the valuation and these SPACs trading, so high above that IPO price and, not necessarily a reflection of the manager here?
Yeah, not a reflection of the manager at all, purely based on valuation. We've never owned Pershing Square. I mean, when the fund first came out, I don't remember what it was, but it was some ridiculous price. It never kind of made it into our zone of where we would buy it. We've owned, Chamath's stuff off and on. I know we've ended up selling most of what we had, at nice profits. But yeah, I mean, at this point, if I can buy good management teams under 10, it would have to be an amazingly compelling situation to get us to buy something above cash and trust.
Would that be the same then for Chamath's new biotech SPACs that are being launched? If these happen to trade under 10, you would look at them, but otherwise, just passing based on the valuation?
So, yeah, I mean, those we're going to take a look at and, get as much of a sense as we can on what the IPO looks like. Because, they are Chamath, maybe they'd be a pop. So if I can get them at the IPO price and they pop, that could be interesting. What we've seen on most of the IPOs coming around lately is you don't buy them on the IPO because their first price is under cash and trust. So if it's something you want, you don't get it. This may be a little bit different just because of who this is. So we'll take a serious look at it. But it's not the type of thing where if we don't get it on the IPO and it's trading well over trust in the secondary, probably be something we would stay away from.
And then, there are several SPAC ETFs already out there. So you kind of have, the beginning point and the end point with, companies that haven't announced the deals or haven't completed the merger. And then you have, the de-SPAC ETFs. There are, some ETFs that combine those two. Give us your thoughts on, what SPAC ETFs should look like and, without getting too negative here, how you feel against some of the competition out there.
Well, so, I mean, without naming names, I don't think these are things that should be combined in one product. They are entirely different animals. A pre-merger SPAC is something, pre-merger SPACs are something I think everybody should own. It's an asset class in and of itself. It's something that's not correlated with anything else you've got in your portfolio. And, especially if you can get this stuff for under 10, you've got a yield to maturity there. So pre-merger SPACs are something everyone should own. A de-SPAC company, that's going to behave totally differently than a pre-merger SPAC. It's going to have a ton more volatility, and there's going to be a lot more correlation there with stocks. So, that's something that each individual investor's got to make a decision. Am I willing to tolerate the volatility of owning the Clovers, the Rides, the QuantumScapes, the Nicolas? And if so, how much of that should I have in my portfolio? And everyone, that decision is going to be different. So, that area of the market, that's not for everybody. Pre-merger SPACs are. So the reason why we wanted to have them in two separate products is I want you to be able to decide, hey, I'm more conservative. I'm going to have more in the pre-merger SPACs and maybe nothing in the de-SPACs. Or you know what? I'm really aggressive. I want a lot of de-SPACs and maybe very little pre-merger SPACs.
Perfect. And then before we get to a couple questions from the chat here, have to give you a shout out. I saw that you recently, rang the bell at close, with the issuance of these two new ETFs. What was that experience like, to be able to go there and be part of that activity?
Yeah, I mean, it was great. The New York Stock Exchange is the New York Stock Exchange. It never gets old. And what was cool is there's a Twitter group that tweets about SPACs. We were able, they limit our guests because of COVID, but we were able to invite a couple of those guys too. So, I mean, that was a lot of fun. One of them actually rang the bell at like 4:02 when he wasn't supposed to. So we may never get invited back, but I mean, we made history. I don't think the closing bell has ever been rang twice. So, we like being, at the forefront of stuff.
I did see that on Twitter from that particular person. Ringing the bell twice sounds like a big no-no. But yes, as you said, you definitely made history with that. So, Matt, we're going to turn to the chat a minute here. We do have some questions from the team. First up here from Brad. I would guess that this is based on those two new SPAC ETFs. Do you expect to have options available to trade on these ETFs?
Yes, we expect to have options available. I believe there are already options on DSPC. SOGU, because it is considered an actively managed fund, even though it's based on an index. I believe we've got to get to a certain asset level there. But given that DSPC is an index, I believe there are actually options trading on that right now.
And then also from Brad asking, do you plan to pay regular dividends on these ETFs?
So SOGU would be just, end of the year capital gains. DSPC is interesting because one of the other things we're doing, I mean, like I said, 19 of our names, have 10% or above short interest. So we're actively engaged in lending these names and really do plan on generating a lot of income from that. So that's going to pay a quarterly dividend. And I mean, obviously the names, these aren't companies that pay dividends. So that would be purely from securities lending interest.
And then just one last question here. AJ asking, how often is the portfolio rebalanced? We talked about the De-SPAC ETFs being rebalanced every month. SPCX, is that one that is rebalanced quarterly? Is that correct?
No, SPCX is actively managed.
Active
so,
too. Okay.
We're looking at that on a daily basis. I can tell you, back in February, we were doing a lot every single day. Lately, not so much, not as much to do, more looking at, specific situations, but we're not nearly as active as we were, but we will be as active as we need to be in that ETF.
Perfect. Well, I think that's going to do it for our questions. And again, those great questions from our viewers out there. So joining us on the show today, Matthew Tuttle, the CEO and Chief Investment Officer of Tuttle Tactical Management. Again, 3 SPAC ETFs. We have SPCX, pre-deal announced SPACs. And then we have DSPC and SOGU, the De-SPAC ETFs that were recently launched. Thanks, Matt, for joining us once again on SPAC Attack. We look forward to following the progress here.
All right. Thank you for having me.
Thank you. All right, guys. Well, you heard it here, De-SPAC, right? You hear Mitch and I talk all the time, about the valuation periods, right? And, how these SPACs, how they're valued pre-deal, how they're valued on deal announcement, and then going into that vote and that move, after the vote, whether it's up or down. And here you have, a way maybe to play this rather than picking individual names. You've got a basket of 25 of the largest companies that went public via SPAC. And Mitch, the thing I like about it, is that it changes monthly. And after a year, those companies are kicked out, right? So you don't have DraftKings in here. You don't have Virgin Galactic in here. You've got companies, that recently completed those SPAC mergers. And maybe the market's not valuating, fully their growth in there. What do you think?
Yeah, it's something you got to take a look at. This is DSPC here, guys, the De-SPAC ETF. One of the things that I'm going to see is we're going to get waves, right? And so one of the things is if you really start learning and try to, stay neutral here. And I think there's a way of you making money now on the plus side and the pullbacks. So one of the things that I'm going to be looking at is if I can build a portfolio, let's say, of what I think are winners and maybe use this ETF to go ahead and hedge and give myself an ability to manage that risk. I think this is a great way to maybe go ahead and hedge it. You have to go ahead and do some calculations to really kind of figure out how many shares you kind of need to kind of help yourself hedge here. But definitely a way to start looking at it and maybe playing both ways, Chris.
Yeah, definitely. Again, there's lots of SPAC ETFs out there. I like that the two offerings here, you've got the pre-deal and you've got the post-deal. You don't really have the in-between. So really it gives you a chance, to do more of a pure play. Myself, I like picking the individual names. But again, for people, who like ETFs, I think these are perfect baskets out there. For investors to look at. So another great interview here on SPAC Attack. We don't just bring the CEOs of publicly traded companies. We try to get some of the industry leaders. We've had several, of the ETF companies on here and also some industry leaders, to talk the SPAC industry. Let us know who you want to see on the show next. whether it's the CEO of a company or, someone like Matt Tuttle, who's got ETFs and knows the SPAC industry. So Mitch, what are you watching out there? Should we dive into the watch list and what's moving? Maybe peek at DraftKings here?
Yeah, we'll take a peek in a second. I wanted to talk a little bit about one that I was even thinking about buying puts today, but I've never really bought a SPAC put. Just a little part of me, I guess, is just a bull in the SPAC industry, so it's kind of hard for me to bet on the downside of stocks. But I felt like today was that day to at least take down the Nikola Dragon. We've been seeing this one been moving up significantly recently. It's been pushing on up there, got up there almost to 20. And when I saw that rejection yesterday of trying to get above 18, that already gave me a sign right here, guys. That Harmy candle showing you potential reversal and an attempt to get back towards the high, and it couldn't even get up there, guys. Strong reversal today when it broke down through kind of the $16 level. I think it's definitely looking interesting now. If I could get a bounce back closer to like $16.50, you could take a short there. I think this one can come back all the way back down towards $10. So that's why I was thinking about taking a chance on this one, even on the put side.
I was going to say, I think it hits $12. Anyone who's watched the show for some time knows that Nikola hasn't been one of my favorites. I was surprised to see this one go higher again, but, a lot of that had to do with the short interest. So I was actually considering buying puts before, but the short squeeze possibility scared me away because I didn't want to be caught up there. But yeah, I think this one falls down. So we'll see.
Another one pulling back, the one that went up for a certain amount of time now. Now I could see it pulling back a significant amount is Mile. Mile went up there, all the way up there past 12. If you guys remember, I was calling this one out back when it was near the sevens. This one did push it back up, but now I really do think this one's heading right back down towards that 52-week low. So just be careful on this one. This one's at 914 and dropping fast. Another one that it did pull back yesterday, but I did see a catalyst that I thought would potentially get it back up was LEV, but we're on definitely a significant pullback in these electronics and kind of EV in general. So just be careful out there, guys. One of the things I did see today is that you did see a strong pullback in kind of those growth names that were making a move up. One of the things that I saw yesterday was bigger growth names getting some love. So pay attention to that. See if you see a rotation, a continued rotation. And with that being said, the pattern, Chris, I think it's gone, unfortunately.
Yeah,
unfortunately, I think it's gone, man. I had to get out of some today. I got out of FRX, got out of FTOC, and you can see it today. Some of these are just starting to come back down. Bark really cracking. Some of these other ones really starting to crack. I think you got to just pay attention to see what happens, because one of the things is we're going to see these patterns, but the question is, how long do they last? In this case, it looks like FRX coming right back down towards 1010. I think it just didn't last there. Gave you a shot for sure, but didn't last.
Yeah, and I think we see some of them, drop below 10 in that vote time now. But, the interesting thing will be to pick some of the individual winners. Maybe they drop a little bit and then, a couple weeks later they rip. We saw that with, Desktop Metal and some of the other, big winners, right? They did sell off on the vote. But if you were able to time your entry, you've been rewarded over the long term. We have Proterra changing tickers today to PTRA. That one's dipping. I do own shares of that one. I think that's a short-term dip. I think this one, remains strong. It's an electric bus maker. It does have some catalysts coming. I think they land some new deals. But this is one kind of like SoFi. I really thought it would rip a little bit, on that vote. But as Mitch said, that pattern starting to go away. The other thing with the pattern, right, is we do have a ton of votes this month. So maybe, the pattern just, maybe we can't keep up and, only one of these stocks each week is going to go higher. So maybe it's a stock pickers market out there.
I think they just rushed to it, bro. You started seeing everybody just being like, okay, I want to jump on the merger vote vote. Let me jump on that right now. And that's
they're selling
guys.
Quick. They're selling quick.
Oversupply.
So, yeah.
Oversupply, Chris. We got oversupply started hitting again. And that's what happens, guys. Supply, demand. There's only enough demand for a certain amount of supply. And I think this is what happened here. You started seeing, I mean, I was even going out like a week or two forward, and I started seeing it. They were already picking them up. They were already picking them up, Chris. And so I think this is what happened. I think it got to the point where the pattern was shown. And what ended up happening is people started looking down the list and then just taking some before they even got close to their date. So that by the time they got close to their date, they were selling into the news versus kind of that buy the rumor kind of thing. And so this happens with patterns, and this is why you got to stay on it. And that's why I always say that the story can change. I think here the story's just changed. All right, so now we're going to be seeing if we get some bigger pullbacks. I'll definitely be watching to see if we get some bigger pullbacks today. Someone on the downside also, Playboy skills, man, I thought that one was really starting to get going, but it's looking like it's cracking back down. And this one's concerning to me because I think, so much hype in this one, and it just doesn't get going. I think it could break down significantly from here. It's already at 18s, broke through the 20 strong. Man, it sucks to see this because, I do know some people that are in this one. And, I don't want anyone losing money. But at the end of the day, I do see kind of that downturn in that one. It had a lot of hype. It's going to need to hold kind of that opening in the 17th of December. I'll show that really quickly. But definitely this is the chart here on the right-hand side. Let's see if it holds that on the pullback. But we'll keep watching these as we see some of these make big pullbacks today.
And just a programming note before we get out of here, on the show tomorrow, we do have the CEO of EVgo. Company is merging with CLII. I'm excited for this interview, Mitch. We've been talking charging infrastructure, the thing behind the thing for electric vehicles for, quite a while, probably dating back to our very first show. So let's dive in, right? And we can hear about, that demand for charging infrastructure and, talk about maybe some of their partners and how they're playing, the EV market going forward. That's a SPAC. It looks like it's at $13.50 today. But this is one that was as high as $24 back on deal announcement. So, there could be a makeup trade coming for this one, but time will tell. But excited for that interview tomorrow. So make sure to tune in tomorrow's SPACs Attack.
Definitely, guys. Like always, we'll keep going at it. Keep giving you guys the brand new interviews at SPACs that you probably never heard of. So definitely stay stay on SPACs Attack. Guys, up next, you got Power Hour. Stay tuned, guys. Always an action-packed show on Power Hour. You guys know what to do. Hit the like, hit the subscribe below, hit that bell so you get notified the moment that we go live. And like always, guys, we'll see you next time on the SPACs Attack.